Hi everyone, I'm Ken from CryptoTradingKS and the CTKS method. If you're new, a very warm welcome and welcome back CTKS family. My goal is to assist you to become more of a financial and emotional blessing to yourself and those you love, gaining real wealth and positive excellence in the process. With the release of the CPI figures, the markets basically went nuts. We saw broad-based green across the board. Also, unemployment claims came in hotter than anticipated, further strengthening the probability of a rate cut by at least 25 basis points. A rate cut means looser economic and monetary conditions, which will result in more money sloshing around the system, and the crypto market absolutely loves that. One thing to understand, we are incredibly early as far as a turning point is concerned. Now, what does that mean for you? It means that whatever you do, when you get in right now, you're timing it really effectively. Of yet, we haven't seen any double-digit gains. Yesterday, we had a terrific inflow for the Bitcoin spot ETFs, literally $250 million. So far, the spot Ethereum ETF is really lagging, and that's showing up in the chart as well. We've started the worst seasonal month inside the markets really positive. Bitcoin is currently up 5.45%, and we can see the liquidation volumes are not that great at the current time. The market is just priming up for a move. 9 days ago, we saw that Bitcoin was starting to change trend. Now that trend change has been confirmed. When we look at retail analysis levels, they're always based on recent indicative price, which RIPs your money. Now, why is that the case? Well, it's kind of simple and quite straightforward if you think about it. Recent indicative price just works pretty much like this. They look back, retail looks back to just levels that have printed just recently, and that's why it's called recent indicative price. And then they somehow become the single most important levels that chart can move to. Now, I'll just explain why that is insane. So, for example, we can see that this is 46 days. 46. Just remember that number, 46. Now, how long has Bitcoin been trading? How long is Bitcoin's chart? Bitcoin's chart has been trading for 5,821 days. So 46 divided by 5,821 is literally under 1/10 of 1%. It's not even 1/10. Well, it's not even 1%. It's 1/10 of 1%, and it's less than that. Now, what does that mean? It means that when you do retail markups of your charts, these levels that people are so confident on are absolute rubbish, and this is exactly why people lose money inside the markets. As students of the CTKS method, we have a much better way. We analyze all of price history, all of it, through 2 levels of standard certification, and we know exactly where the price is going to get supported, exactly when the price will just push through a resistance level, come back and likely retest it, just depending on how much momentum is inside the markets. But we know exactly and precisely where structural support and structural resistance levels are inside the market. We do not do retail analysis. Retail is another word for consistently loses money. Those dashed horizontal lines are called CTKS levels or Stanfield levels. They're institutional grade structural levels formed through 2 levels of standard certification. In other words, when you see one of those dotted lines, it's not a recent indicative price line, and you can generally tell retail influencers move their levels all over the place because they're trying to match the story of price. They're not looking at structure at all. It's important to know when you look at one of these levels, it's been formed through the application of all of that theory. It is a scientific process, and it allows us to form the world's leading indicator of price. We know that 115,800 is undoubtedly where Bitcoin will come up and experience structural overhead resistance, and we know the upper levels and we know the lower levels. Thicker means stronger. thinner means weaker, more clustered means stronger. It's also important to know retail levels. It's very important. You must know how the street thinks. The street is basically non-institutional grade players. These people just put money into the market and hope and pray. It is not a good strategy. It's much more important to know where the structure is inside the chart. If you go through the news, you'll get a bit of an understanding on what things are doing, the momentum, the direction, but it's structure that is actually important. These recent indicative price structural levels, as people, retail influencers call them, they're not structure at all. It's less than 1/10 of 1%. The way to just understand why that's a problem, if you were driving your car and you could only see out of 1/10 of 1% of your windscreen, and it wasn't directly in front of you, and you were traveling at high speed, risking it all, you had your family in the car with you and you're flooring it, you can't see out the front window, are you going to be safe? Are you going to arrive at your destination? Probably not. When we look structurally, we basically clean the window in front of us completely. We can see 100%. From a structural stance, we can see that around this area, from around the 107,400 up to 112,800, we actually have a lot of structure. If we get a pullback to test things out, and the market will simply say, oh, the Fed rate hikes were priced in. If you hear that term around, that is just trying to explain a retracement. One of the reasons that RIP analysis is so damaging, apart from the fact that you can't see out of the front windscreen of your car traveling, your financial vehicle traveling at 1,000 miles an hour down a particularly windy road, is that retail often gets it wrong. Now, what does this mean? A retail level is this 116,989, and it kind of makes sense because, that must be structural resistance because it came up and it was rejected. So the theory goes, but structure actually doesn't work that way at all. The real structure is up higher, so people will start to pile in because the candle will close above 116,989. Close where? Bitcoin is 24/7, but that's okay. That's a topic for another video. But the real absolute structural resistance is around that 118. So people will pile in just before it hits resistance, and then price will likely make a wave down. These retail buyers who bought because retail influencers don't mark up their charts with 2 levels of standard certification will basically say, that was wrong. Sell now, and they will sell now, and then it will find a degree of structural support and just continue on. We can see a very similar thing at the 120. The real resistance is above. At 123, the real resistance is above again. Now, when we look at this, we're just saying that structural overhead resistance is all the same. It is not. Underneath these areas, which are called SZs or Stanfield zones, there's differing levels of structural intensity. Okay, now what does all that mean to you? Well, please smash that subscribe button to make sure that you get updated on the structure as the markets do their thing, and it's going to become really important. We've had a bit of an upwave here, and we're going to get a lot of panic inside the market. When you get panic inside the market, it can create really big green candles. Those green candles are terrific because people feel so excited about them, and what's not to feel excited about? They're really good, but the problem is they can often reverse. Now, are we expecting a reversal like this? Not necessarily. What we're understanding is that the markets are very close to printing or have already printed all-time new highs. There's a lot of FOMO in the markets, and FOMO will print these big green candles. Just be aware of that. Even though you get a green candle, it can follow through the next day and retrace. This is absolutely and utterly completely normal. This is not something to be concerned about. If you know where your real structure is, not the retail structure, but the real structure. And people might say, and especially if you're new to the channel, and if you are, a very warm welcome. You might say, but Ken, this 114,800, it just blew through there. It didn't do much at all. Well, this is the nature, but it doesn't mean in the next 24 hours it couldn't come back, retest, couldn't go up further, start to consolidate. When you get a lot of momentum inside the market, you have to understand its directionality. There's also something called intercorrelation and interconnection. We must look at total crypto market cap in alignment with Bitcoin and your money charts, what you're putting money into if you're not trading and investing in Bitcoin. Now, total crypto market cap, when we throw on the service indicator, which is just that we do the markups for you in terms of level 1 and level 2 standard certification, you can see this particular 3.92 trillion. That was a very key level inside the market for total crypto market cap to breach. Now we've come up to some lighter levels where it already started to react, but there's a lot of positive thinking inside the market right now. A lot of people will be FOMOing in. These are FOMO candles. The big green candles are FOMO candles. But if we look back at total crypto market cap, we can FOMO into levels and FUD out of them, FOMO in, FUD out, FOMO in. But they're the critical levels that we must keep our eye on. Another thing that retail does, they will only look at the chart that they put money into. They will not stack probabilities. There's a very scientific method to stack probabilities, and it starts with doing the cheat sheet. The one thing to remember, you are really early in this uptake. It has only just confirmed a breakout. The bias is undoubtedly to the upside, but structure will always impact your charts. Price is the reality. News describes what price actually did, but structure tells you where price can go. The question becomes, why is structure important? For example, if we look at XRP, we can see this 304.48 level, or you can just say around that 304.50. That's an important structural level, but then we get a positive CTKS gap up to 316, and the real overhead structural resistance is at 318. Given that the crypto market is in the early stages of people catching on that Bitcoin is about to break out, all hell will break loose. The FOMO will enter the market, and we, as always, are early. Other people are late, we are early, because this is why we focus on a daily basis. Because we know where the structure is inside the chart, we know that XRP can come up really, really fast. High impact economic data releases will shift and move the charts around. When we look at ADA, this big candle was the CPI print. It kind of went a little bit nuts. But when we look at the structural indicator, what are we seeing here? Structure rejected it here, and structure saved it here. Structure is so undeniably important. It is just absolutely critical. If you're trading and investing without structure, you're in a world of hurt, because you're literally looking at 0.1% of the price action and making life-changing decisions based on that. Instead, the best thing that you could possibly do is to learn level 1 and level 2 standard certification. It's a skill that will last you a lifetime, and mark up your own charts. We have a service that marks it up for you, but I would recommend that you learn how to do it. The markets are at a time where it's really important to know where the structure is. If we look at Solana and look at it from a structural perspective, what does it tell us? Is Solana obeying structure? Well, you can see up at that 225.50 there was structure just around that 222.15. When the structure was hit, did it reject? Could it go higher? If it does a structural pass, it puts the higher levels into play. But if it does a structural failure, it puts a lower level into play. If it does a structural pass there, it puts the higher level back into play. And if we get really weird economic data releases, and they occur all the time. We anticipate that structure will capture those price movements, and that is exactly what happened inside Solana. You could trade or invest literally blind, or you could know where smart money is buying and selling, and we see it here playing out all the time. The thing to keep in your mind right at the current time, we're really early. And the other thing to always bear in mind, price is always moving in a wave. It's always coming up and down. And price of Bitcoin is related to so many other things. It's very important that you stack probabilities. When you understand how all the world's markets move together and you can get signal from that, it can help your timing. Timing is also possible. Unfortunately, a lot of people think that the world's markets all move independently of each other, and there's no relationship whatsoever between Bitcoin, which is the blue line, and, for example, the S&P 500, the Nasdaq, the Dow, or the Russell. You can see that's wrong. There's even intercorrelation between Apple and Tesla and Microsoft and crypto. With all the world's markets moving as one, it's really important to stack your probabilities. If the markets weaken, we will know. Make sure that you subscribe and hit that bell notification icon. The CTKS Method Global Family are experts at timing. We seek to time the market. We're always looking for continuously reliable signals. And it's important to remember that structure really matters. Knowing where the algorithms and institutions will come in and sell and where they come in and buy is absolutely critical. You cannot be consistently profitable without a very, very solid understanding of institutional grade structure. Many people seek to buy at the bottom, but we need to be sensible and we need to be secure. We need to see a trend change, and we've seen a trend change that has now been confirmed inside the crypto market. You are spot on early, and that means don't worry about buying at the bottom, and you're not going to miss out. Just layer in. And one of the things, when you layer in, what you're seeking to do is to get a participation trade so you can do that on anything that you like so you don't feel you're missing out. And then you can just associate price with structural pullbacks. Price is always moving in a wave. As soon as you understand it's just an eagle market, it's not bull, it's not bear, it's just eagle, up and down. Always keep up your daily positive affirmations for abundance, financial success, and happiness. And always know that inside financial markets, you never compete against other people. Your loss is not another person's gain, and your gain is not another person's loss. There are literally millions of people, billions of decisions made, and they're not all the opposite of yours. That is another retail myth, just like price discovery. And also recent indicative price structure, which never existed. Have a great day or night ahead, my friends. And if you've made it up to this point, you are just awesome. And perhaps just drop something about price discovery in the comments. I'm really interested in your thoughts on that one. Do you believe in price discovery? And if you just comment price discovery, I'll know you made it up here. So you are absolutely sensational. Kate and I do these videos for you. We appreciate you. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.